Our speaker for our second session is Mr. John Walker. He is the Executive Chairman of Macquarie Capital, Infrastructure, Utilities, and Renewables Asia. And we also have 4 experts with us to share their insights. Mr. Eduardo V, President of BDO Capital and Investment Corporation. Ms. Donna Gonzales, Senior Investment Officer, International Finance Corporation. Mr. Henry Hiramoto, Representative, Japan Bank for International Cooperation, Manila office. And Mr. Ricky C. Nam, Senior Vice President, Bank of Tokyo-Mitsubishi UFJ Limited in Hong Kong. Maybe invite John for the...
Good morning, everybody. I noticed that some of the front rows have emptied out slightly, so I hope we can make this a little entertaining for the people who've remained in the room. Firstly, I'd like to thank the government and congratulate the government for arranging this conference today. I'd also like to thank them for adopting a logo. If you saw the earlier slide, the logo is a little similar to the Macquarie logo. So I think this has exhibited great foresight and talent on the part of the graphic designer that designed the logo for the conference today. The previous speaker spoke about the need for people to network together and talk to each other about why there should be a lot of excitement about infrastructure development in the Philippines. I similarly encourage you to do the same. My organisation is certainly very, very excited and very committed to this market. Thank you, fellow panellists, for I only know some of these people, and only some of these people know me, so it's going to be interesting to see how we go with a discussion of what I raise in the presentation. So today I've been asked to speak about the general issue of project finance challenges in emerging markets. So my presentation is not a presentation which is specific to the Philippines, but obviously it will touch on some of the specifics. I have a very long presentation, so I'm going to fly through it very quickly, and I guess in a sense try to identify the issues that the other speakers may wish to touch on along the way. I always like to have a few key takeaways at the beginning of my presentation, and I really just wanted to make the point that I'm getting quite tired of going to conferences and talking about this issue. And I suspect there's many people in the room that have had similar experience. Too many conferences and not enough action. Now, that's not to say that conferences are not important. That is not to say that this one is not very, very important. But I think a lot of the things that I'm going to say, you guys are already well aware of. Bottom line is that policies for project financing and PPPs need to be more responsive to private investors' needs. If the aim of policies is to attract private investment, these policies need to be more responsive. They also need to be more holistic and coordinated across government. There are many government agencies that don't realise that what they do is fundamental to the success of PPP programs. And I'll touch a little bit more on that later on. These are agencies which at first glance don't seem to have any association at all with infrastructure. Potentially such as the agencies that are there to develop policies for the national savings of a particular country. Policies on that point need to be better directed towards national savings pools. And of course, as we've seen in the Philippines, the GSIS, through its investment directly into the Pinay Fund and other projects, has become an essential part of supporting the development of infrastructure in the Philippines. Asset recycling has got a key role to play in infrastructure development, and potentially a key role to play in project finance. And I'll talk a little bit more about that later. And finally, you know, when you think about it, we all spend a lot of time telling governments what they should do and what they shouldn't do. We spend a lot of time talking to governments about the PPP regulations. Perhaps it's time to sort of slightly turn this on its head. Perhaps it's timely for private sector interests to think about developing their gold standard for project financing and infrastructure. Perhaps it's time for the private sector to define its standard and to present that as an opportunity to governments. Because at the end of the day, we have a great responsibility as well, and it's probably not enough to just lecture governments on what they should do better. So that's sort of an overview of what I'd like you to think about and take away as some of the themes. So in terms of Macquarie, I'm going to fly over this. Basically, I guess we're well known in infrastructure for two things. One is we're the largest private manager of infrastructure assets globally, with $100 billion worth of infrastructure invested, as you can see there, around the world. And we have an advisory business which also uses its balance sheet, known as Macquarie Capital, which is a very highly ranked infrastructure advisor, and in its own right on the balance sheet, a quite highly ranked investor into infrastructure. And we've invested across the spectrum of infrastructure. I guess something that this audience really doesn't have to be told, I've just gone over that, is that there is huge demand for infrastructure, and that demand, new infrastructure, that demand is probably outsized in this region. Lots of infrastructure investment going on both at the equity and the debt level, and lots of dry powder. The issue here is not availability of capital for investment into infrastructure. The issue is around matching that capital to its requirements. So this is very responsive. You see in Asia at the moment around $15 billion of dry powder for investment into infrastructure. Macquarie has several billion in the new Pan-Asian Fund, JP Morgan has several billion, Morgan Stanley has several billion, the list goes on. Here in the Philippines, the PNA Fund, which we manage, is around $650 million, with some of that spent, but still a lot to spend. So again, the issue is not availability of capital, it's really about that matchmaking exercise, and that's basically the purpose of this conference, of course. But lots of challenges for financing in emerging markets. So, there we go. So, I guess this is just to summarise the key points. And one of those, of course, is the need for a stable political environment. The other is the need for a stable economy. The bidding processes, which we'll talk about, fundamentally important for that capital. The risk-return balance, of course, fundamental. The deal structures, the stability of the financial markets, and I guess the flexibility of the financial markets, and of course the issue of bid rules. So these are issues that this audience is, I think, more than familiar with in terms of the challenges. So these investor requirements, if you like, are the agenda for resolution of issues. Then the key challenges in the emerging markets, as we see them, of course, start with this issue of the bid processes themselves, the timelines for the bid processes, the costs of bidding, the need for, I guess, generally in many markets, for much more work pre-bid on the part of grantors. The bid rules themselves do tend to lack flexibility in many cases, lacking clarity. The concession agreements, in many cases, very unrealistic in terms of the expectation of investors, and so on. Perhaps, and I'll go into a little bit more detail on these, but perhaps two of the things that some markets we find need to face is that PPPs are not necessarily a panacea. And this is equally true in so-called developed markets as it is in emerging markets. The reality is that not every project is going to be successful as a PPP. So I think one of the important things to think about is in assessing the projects to bring to market, and grantor is assessing the projects to bring to markets, to really have a very realistic view as to whether private sector investors will really come into that project, or if they do, will it in the long term be a successful project? And I think it's something that does need a lot of consideration. The other point is this point that I made about national savings. So the key to the enormous success of PPPs in markets like Korea has been the ability of the government to have policies to create huge national savings institutions, which in turn have been in a position to invest back in to not only brownfield infrastructure, but in the case of Korea, for example, predominantly greenfield infrastructure. And of course, as I mentioned, I think the Philippines is particularly well placed here because the GSIS has acted as a leader, if you like, to attract foreign capital. So in the case of the PNA fund, for example, with the GSIS seeding that fund, we were able to go to Europe and raise significant capital from European pension funds. We were able to convince Macquarie itself to put substantial capital in that fund. So I think one of those less obvious things about designing successful PPP regimes in project finance is the ability of domestic savings to take a leadership role. You know, someone in the previous session made a point about the importance of attracting foreign capital. Well, this is something that I think has to be put on the agenda. It might be the finance department or it might be the health and welfare department, but it somehow has to get its head together with the transportation department and the ports department, and if country happens to have a PPP office, with that PPP office. So in terms of the bid process, I think the key highlights, and perhaps some of my colleagues will go into more detail on this, are the time frames, bid costs, the need to structure the projects more closely, and the restrictive bid processes. On structuring the processes, in some markets now, that's creating new industries. So for example, in the case of Macquarie, we have a new company known as Macquarie Project Services that works with Middle East governments, not as a financial advisor, not as an investor, but as a specialist in project design in a way which will bring a project to the market which the private sector can see as financeable. So I think they're the sort of four key things that need to be addressed in emerging markets on that point. In terms of the bid rules, it's obviously important for probity reasons that bid rules be very tight and very transparent and very open. But we find in many cases more flexibility needs to be built in to that process. Similarly with bid bonds, I think sometimes bid bonds can be unrealistic. Again, there are reasons that public authorities need to be careful on these issues, but more flexibility and a bid bond system which is more designed and matched to the circumstances would be more useful. And of course, this point again about overlapping ministries and the need for great coordination within government when it comes to the clarity of processes. In concession agreements, a whole lot of issues that we come across in regard to debt coverage ratios, land acquisition. In Indonesia in particular, land acquisition is a huge issue. And from time to time you find yourself financially closing a project only to discover you still don't have the corridor to build the toll road or to build the airport. So real issues, and I don't think that those issues are restricted to places like Indonesia. Termination, again, this issue of hair trigger is an issue which causes great issues. So there's a range of different issues around the concession agreements for emerging markets that need to be reviewed. I have 3 minutes to go. Thank you. The post-bid process itself, and this is just worth spending a little bit of time on. You know, there's often a lot of celebration at the end of the bid. There's often a lot of celebration when a project is being awarded. But believe me, that's just the beginning of the story. And I think this is an area where there has probably not been enough discussion and not enough emphasis. And it's not only in that 6 months post-bid when you discover that things are not as clear as they should have been and that not all of the obligations on all sides are being met, but it may be 5 years down the track. It may be 5 years down the track when you discover that the government may have changed its mind about the tariffs that it's prepared to allow to be charged. It may have changed its mind about pricing. I've read some banking analysts report recently focusing on the Philippines that have talked about this issue of water pricing and the frustrations of the concession holders in being able to have the obligations for review of those pricing met. When investors stand back and they assess a current PPP project in a market, they're going to look at those issues down the track. They're not just going to look at the immediate issues, but they're going to say, but hey, how do we know we're going to be able to increase those tolls or those rail fares in line with inflation when we have a situation here in a market where those kind of commitments may not be honoured? So post-bid, immediately and well into the future, very, very important. And this is again where ministries and governments need to coordinate and have their individual agencies understanding that right across government there has to be a contribution to this one fundamental issue for many countries, which is infrastructure, health, welfare, schools, mobility, ports, economic development, all of those things. It's hard to think of an agency that does not and should not have a responsibility in that area. It's not just the PPP office. So I think this is a key point to think about. FX volatility, well, I think that is an obvious issue. Flexibility in credentials as markets develop more is becoming more important. I think some of the grantor authorities across a number of markets are very black and white in terms of assessing credentials and draw a very clear distinction between financial, strategic investors and, if you like, corporate investors. So, you know, a small axe that we would have to grind, for example, is that over the last 10 years we have probably been the largest private owner of airports around the world. Now, we've bought and sold quite a few of those airports, but we still have sort of 5 or 6. Believe it or not, it's very difficult for us to convince some authorities that we are an airport operator because they see us as a financial investor. So I think there are issues around credentials which would move to the benefit of project financing and move to the benefit of PPPs with some more education and some more interaction between the public and the private sectors. Deal selection, I think I've touched on that sufficiently. We're talking about the need to properly structure deals and to understand that PPPs are not necessarily a panacea. Just, I've got, my time is up. I've made that point on panacea. I've made my point on organised savings. I just want to talk briefly about this idea. I mentioned that we spend a lot of time telling governments to do and what not to do and what's right and what's not wrong, and I've just spent the last 10 minutes doing that. I've increasingly come to the view that it's time for the private sector, ADB, IFC and others to step back and say to themselves, now, in an ideal world, what would work for us? What would we need to develop that elevated railway in Bandung? What would we need? Now, believe it or not, we, as a group, private sector and banks, have not actually done that. We've had a lot of discussions, we've had a lot of thoughts and a lot of debate. But no one's taken the initiatives to step back and say, let's design the gold standard for private investment in infrastructure. Let's find that gold standard, let's make it an accreditation, and let's take it to the various emerging markets and present it to them on a take it or leave it basis. So let's take it to the governor of Bandung and say, we can build your private railway if you do these 3 or 4 things. And in a sense, do that irrespective of what the PPP rules might be in particular markets. So this is a thought I'd like to leave you with. And my view is that the G20 has recently endorsed this new global infrastructure hub, which is going to be given a budget of $20 million to do something about better coordinating the various players in the private infrastructure sector. I think this is a role that could be ascribed to that new secretariat, and it can work together across private players, development banks, strategic investors and others to develop this standard, an unambiguous structure to be taken to governments, and who knows, in itself that standard could influence the form and the shape of project financing and PPP regulations going forward. So just a thought that I'd like to leave you with today, and I'm sorry that I've gone slightly over time, and I hope I haven't presented the panel with too much of a challenge in terms of the various points that I've made. Thank you.